What did we say yesterday? That the market would most likely retrace due to what Jerome Powell said. Whatever it is that he stated yesterday in that discussion in Washington, D.C. was not dovish, yet the market reacted in a positive way. We talked about not overcomplicating it. And Exhibit A, this happened. A retracement right back down to our previous support range for QQQ. QQQ is a NASDAQ ETF. It goes 1-for-1 for NASDAQ. This is where we were trading at yesterday. I thought that this was an overreaction. Not only just that, but I've explained it many, many times that I think that the NASDAQ is overbought and due for a pullback. That's not rocket science. Anytime that it rallies and becomes overbought, it corrects itself right back down to the moving average. Becomes overbought, corrects itself. Overbought, corrects itself. Overbought, corrects itself. Is it so wrong to think that patterns will most likely repeat themselves? And not just that the market can't go up, but that it has to retrace itself to continue to rally. I mean, this literally happens even on the day chart, right? We can see it time and time again, even during bull markets. Markets always pull on back, but the focus is for them to make higher lows. And that's exactly what we were looking for. On the 1 hour time frame, this did not come as a surprise. We talked about it within our live trading session with the LPP team, right? They got to see me trade live, and I shorted the market today by going into SQQQ. SQQQ is a NASDAQ bear ETF. It goes up when the NASDAQ market goes down, and it does that 3 times of whatever the NASDAQ market moves. So if the NASDAQ market moves down 1%, this thing moves up 3%. I made $15,556, and don't forget about my 75 cents by focusing on one thing and one thing only, not focusing and not caring so much about what news outlets were saying yesterday as the NASDAQ market was overbought that, Jerome Powell says that inflation is coming down. That's not the concern. The 2 things that were stated yesterday was that if inflation and if job reports continue to come in hot, that they will raise rates more than what is already expected. And then on top of that, we haven't even felt the effects of quantitative tightening. And if you think that the market can't pull on back, especially when we haven't felt the effects of quantitative tightening, then I think that you're due for a pretty decent surprise. So this is what I love. And it's when people are so infatuated by the idea that they think that the market has to continue to go up and never prepare for these pullbacks. Remember, it doesn't matter if the market is bullish or bearish. There's always money to be made if you focus on one thing, and that is market direction. It is so important to understand overbought and oversold levels on an overall uptrend, on an overall downtrend, because you can see how the market is actually moving at a much slower pace, right? Just like I explained, it's very easy to see overbought, oversold, overbought, oversold, overbought, oversold, overbought, oversold. So you can anticipate and prepare in advance. Not that you're trying to predict the future, but that you understand and are giving time to really respect these pullbacks as they're bound to happen. And that's exactly what led to our success today with SQQQ. I locked in profits. I left myself with my 1 lucky share, and I actually sold very, very early. I ended up selling a little bit closer to, I don't even think I've been trading this as it surpassed $35 a share. I sold on the initial push and then really began to load off right around that 35.60, 35.70 range. So again, I love to embrace this. I am not a perfect trader. I make so many mistakes, but I always focus on one thing, and that's learning from the mistakes I've made in the past before. And that's just something that a lot of trolls in the comment sections just can't do, right? And this is why they continue to make the same mistake again over and over again. But guess what? They blame everyone else for their mistakes. And guess what we do, right? We learn from our mistakes. We journal them, right? And try to retain that information so the next time that we're up at bat, we don't make that same oblivious mistake. What is the definition of trying to do something over and over again and expecting a different result? Insanity, right? It's ridiculous to think that if you're not going to lock in profits at overbought levels, yet the market didn't really justify why it rallied yesterday, that you think that it can't correct itself. And again, it's never a bad idea to lock in profits. There is no time for perfection. You will never be a perfect trader. You will most likely never capture an entire, move on a trade. Just be grateful to be effective, an effective entry and an effective exit. That's what's most important. I think it's a better habit to have to lock in profits early than to be someone that doesn't lock in profits at all and then goes from green to red. But I guess, again, you're an adult. You can kind of choose what you prefer yourself. One of the things that I wanted to make sure that you guys were aware is that we have initial claims and continuing claims report tomorrow, 1 hour before the market opens. You guys know this unemployment report that was released last week. How did you think that I knew that, this job report was most likely going to come in lower than expected? It's because of these initial claims and continuing claims. Initial claims and continuing claims are people that continue to file or that are filing for unemployment checks. Initial claims are filing for unemployment checks for the first time. Continuing claims are filing for unemployment checks for a continuous period of time. So there's a set expectation, and if they come in lower than expected, then that most likely means that less people are losing their job and more people are getting new jobs. Therefore, they no longer qualify for unemployment checks. This is super important to understand because the market reacts to that specific data, especially because of the unemployment report and the payroll report of how many jobs were created in the month of January. It was nearly double of what it was that was expected, or if not more than double. Overall, Tesla extremely overbought. We have Google pulling on back today, 8% in the red due to its AI issue that I forgot what it's called, but its AI is like sharing misinformation or something like that. So a very aggressive sell-off, down 8.5%. And again, one thing that I want to make very, very clear is that just because I view the market to be overbought, yeah, I get it. My thumbnails say, oh, market crash. It's just YouTube, right? If you get triggered by that, then I think you have bigger personal issues that you have to deal with to fill the void. But what I'm trying to really embrace and remind you is that I don't want the market to crash, right? I don't want the market to make new lows from where we are at 52-week lows. All I know is that we haven't felt the effects of quantitative tightening, and we've seen a beautiful decline on our inflation rate, and I don't think that will continue. I think that the Federal Reserve will begin to step on the gas on the quantitative tightening because of how strong our economy now feels, and this is the concern that you should have, because if we have a stronger economy, then they will most likely be more aggressive with their quantitative tightening, and if inflation doesn't continue to decline month over month as it has from 9.1% to 6.5%, then what do you think they're going to do? They will continue to raise rates as they begin to sell off their balance sheet and sell mortgage-backed securities. What do you think is going to happen to the housing market? Interest rates are going to skyrocket on that. Again, it's something that we have not experienced just yet. So if you are so infatuated with the idea that no, markets have to recover, I do agree. Markets always and will always, most likely, eventually recover. But it's not a definite that it needs to do at this very moment. Position size is everything. And the only people that freak out, the only people that cry, the only people that hope for the market to recover are those that did not prepare because they have no more money to buy at the lower levels. So if you understand that, then don't be one of those people. You can see based off of the comments who is someone that is bag holding, who is someone that is begging for the market to recover. But then you can see the people that are calculated, the people that have the time to tolerate how long it will take for the market to recover. We all know that eventually it will. Let's give it the time that it needs and understand that corrections and pullbacks along the way are bound to happen. You can either prepare for this in advance or end up getting burned and regretting not locking in profit. So overall, I'm very excited to follow up with this. If you guys have any specific questions, feel free to reach out to me via Discord or via Instagram, and that's the first or third link down below. Friendly reminder, I do trade with one group and one group only, and yes, they get to watch me trade live every single day. I offer nothing else. I don't sell signals. I don't offer any other group. It is one thing. If you want my time, if you want to watch me trade live every day, if you want access to me, I do charge for it. It is not free. You can try to figure this out all on your own, or if you join my team, which is the second link in the description down below. It's my Learn Plan Profit 2.0 team. It's a one-time payment, lifetime access. We're running our biggest sale. It's $150 off. It includes an A to Z video lesson library designed for complete beginners, my daily live trading sessions, my private group chat where you can message me at any time, and access to my TechBuds HQ. You get access to all of this for $150 off right now. It's the second link down below. If you want to condense the time that it will take for you to learn this stuff, this is what I offer. If you want to figure this out on your own, feel free to do so, right? My simple question to leave you with is how much money will you lose and how long will it take for you to figure it out on your own? Will it be more than what it would cost to actually just join LPP 2.0? And again, I don't just post my profits, but you actually get to watch me trade live every day. green days, red days, my entries, my exits, but most importantly, you hear my thought process of why I'm entering a trade, why I'm cutting losses on one, and that's where the value is in real time, especially trading in the market, especially during current market conditions. So I appreciate your time. Hope that earned a thumbs up. Please consider subscribing if you end up joining our LPP team. That's going to be that second link down below. And don't forget to pick up some of your new trading mouse pads or trading apparel, and that's that fourth link down below. I am using the Webull trading application. It's free for everyone in the US. If you use my link, which is the fifth link in the description, it is, again, free to sign up. You can deposit $1, and by using my link, you can earn up to 12 free shares, and I earn 1 free share. So it's a win-win for both of us. If you have any questions about this, you know exactly how to reach out to me, and that's via Discord or via Instagram, and everything is linked in the description. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.